Hi, everyone. Getting started here. Hi, that was a great session I just caught right there. My name is Katie. I'm with public.com and I'm here to help myth bust the stock market. So I have a few slides here. We're gonna go through some of the common myths about investing, talk a little bit about public, and I'll leave some time at the end. A link was just shared in the chat. That is good for $10 worth of free stock in our app to get started with investing. So go ahead and tap that. And with that, I'll kick off. Let me, oops. Okay. All right. So again, I'm Katie. I'm with public.com. We're a social investing app. I'll get a little bit into that in a few. Just make sure. Can you guys see? Can somebody chat and let me know if that worked? Because sometimes it goes off to the side. Was that good when I presented? Okay, great. I did one of these before and it was totally to the side the whole time. So yeah, my name is Katie. I'm actually a former freelancer. I freelanced for startups for a couple of years, a few years back. It was one of the most formative periods of my career and I enjoyed it so much. So jealous of the lifestyle. I miss it a lot. I now do marketing for public.com. Figured a good way to tee up where I'm at right now. These are my most frequently used emojis. So as you can tell by the knife and the Canadian flag, like we're hanging on.
Hey, Katie.
Yes.
We do not see your presentation.
Oh, okay, weird. Oh, you know what? Share screen.
Perfect.
Thank you. Share. Okay, this should work. We good?
Working well, thank you.
Okay, thank you. Okay, so public.com is a social investing app. As you see here, it's a way to invest in individual companies on the US indexes, so on the US exchanges. So it kind of looks like a Venmo meets an E-Trade, and it's really trying to make investing more accessible and more mainstream. And the social piece is really a great layer for building your financial literacy. So it's a great platform to use if you're just getting started, or if you don't really want to go it alone. Sometimes some of these platforms, you're dropped in and you're kind of alone with your charts and numbers. This is a more community-driven experience where you can exchange ideas, talk about businesses and trends, and kind of build your literacy over time. And just to orient around when we talk about investing in the context of this conversation, I'm specifically talking about this blue square here, brokerage accounts. So that means it's a taxable investment account. You're picking individual stocks or ETFs to invest in. It's a little different than some of the passive investing platforms you might know, like Betterment or Wealthfront. With those, you're investing in a bundle of investments of a mutual fund. And those are great too. But with a brokerage account where you're picking individual stocks, sometimes it's helpful because you're kind of actively learning about the companies themselves. So again, this isn't financial advice. Everyone's own kind of plan and journey is different. But for the purposes of today, I'm going to be talking specifically about active investing in brokerage accounts. There's the link again. So yes, so today, not a lot of direct investing advice. We're an investment platform. We don't give direct investing advice, but I can share basic concepts and news you can use. Again, we have that free stock gift, and then I'll leave a little room at the end for your questions. This is the slide we have to show that just reiterates everything I just said. This is just for educational purposes, not investment advice. And with that, we'll get going. So the first myth that I hear from a lot of people is that, you know, I'm in my late 20s or I'm in my 30s. I feel like I don't know about investing to the degree I feel like I should, and it's too late for me to kind of catch up. And what's interesting about that sentiment is that you're not alone. We just did a survey of about 3,000 investors, young people of all ages actually. And a quarter of them said they didn't learn about the basic principles of investing until they were after 30. So this is not an issue of you being behind. It's really a function of the fact that this really isn't taught in school. Unless you study business in college, you're really not going to get it then. So you see most people are learning after, they leave college and even into their 30s. About 4% of people in our survey said they learned before they were age 10, which I think might be, they might be lying, but if not, they're ahead of the game. But it's really not too late to get started. And what's interesting about what we saw in our survey is that over half of the people said that when they did learn to invest, that they had to teach themselves. This is very common. What's great with the internet, there's so much information out there, and there's so many ways to learn. I think one of the impediments to people sometimes is there's so much out there that you don't really know where to start. But there's a lot of resources and tools out there for your disposal to learn about the basics. And this stat is my probably most hated stat. There was a survey a couple of years ago that found that women invest 40% less than men on average. Investing is really a powerful tool for building wealth over time because of compound interest. And so if the market is going up over time, the sooner you're investing, the more those gains accrue over time if that's the direction of the market. And so this just amplifies kind of everything we know about the wage gap and disparity overall. And it's really, there's no reason for this. There's actually studies that show that women who do invest tend to outperform men in some cases, so in many cases. So there's no real reason for it other than the fact that this is just an industry that has been really homogenous forever. It still is to some degree. We're making a lot of strides, but if something hasn't been marketed to a group of people or it hasn't been made accessible to them for so long, you're ending up playing catch up. And so at Public, we're doing things a little bit different. We're really building a diverse, inclusive community of investors that doesn't look like the picture you have in your head of investing when you might close your eyes and think of that word. A lot of people say like the guys running around in the blue jackets on the exchange. Yes, that's the history of investing and that's the stereotype, but that's really not the future. So at Public, we're building this broad community. We have really diverse investors that represent people who are like icons in business and mainstream culture. And that's because we want to bring investing to the mainstream and make it accessible to more people. The second myth that is really a hot topic right now is that investing is just like gambling. You might have seen this story in the news in the past week. A quick recap of what happened was Hertz is a company that was really impacted by COVID. Their business was in a really tough spot. A few weeks ago, they filed for Chapter 11. But then what they did was they turned around and they wanted to sell more of shares of stock to retail investors because they anticipated there would be a demand. Usually people aren't going and buying shares of bankrupt stock. But one thing that has happened the past few months is there's been this surge of kind of speculative trading behavior where people are trying to take big swings. So they'll buy shares of a company that looks like it's kind of on the ropes in the hopes that it'll come back and they can make a higher return. This is a small sliver of the investing community. Investing overall is mostly, for most people, a long-term game. But if you look at the headlines now, you see a lot of this kind of speculative behavior. And actually at Public, when this happened and Hertz, was trying to sell more of their stock, which many experts said was probably worthless, we decided to take them off our app because we didn't want any of our novice investors to see other people maybe making that move and thinking that it was, a non-risky thing to do when all the analysts and experts were saying otherwise. So investing it's not like gambling. And so that's a key point to make. A lot of people kind of conflate the notion of day trading and investing. Day trading is when you're making a lot of short-term moves in hopes to make money quickly. So it's a high level of effort day to day because you're watching charts and you're flipping things, and it's generally riskier. What most people on our app do is long-term investing. In fact, 74% of people say they're long-term investors. And so that means you're trying to build wealth over time. You're not really, finicking with your portfolio multiple times a day. So there's a less level of effort day to day, and it's generally safer. Of course, all investments have risk. And as I said, the way the stock market has performed in the past doesn't guarantee how it's going to go in the future. However, if you look over time, the market has gone up 10% on average. And so if you have a longer time horizon, you have more of a chance to kind of ride out those bumps. So one thing we do in our app is we actually put safety labels on certain stocks if they're deemed risky by the SEC. So if a company declares bankruptcy, for example, you'll see that on the stock page, and we'll never stop you from investing in it. That's your prerogative, but you will have to slide to make sure you kind of understand that this might be a riskier investment. And so just for some perspective, this is the Dow Jones over many, many years. So as you can see, over time, it's gone up. Who knows what's going to happen in the future, but that's been the trajectory. So you can see if you have a longer time horizon, all those little bumps, you can ride those out. Versus if you're doing the day trading day to day, you're exposing yourself to more risk. The third myth about investing is that you need a ton of dough just ready to get started. This definitely used to be the case. So back when all of this was started, it was called the Buttonwood Agreement when they started the U.S. Stock market, and it was actually built to keep people out. Part of the agreement was they were going to meet in these closed door rooms so that everyone couldn't hear them talking about this stuff. And so the heritage of investing is very much an exclusive club that only certain people get into. And it took many, many years to kind of break out of that. So even in the 80s, you saw like the stereotypical like greedy investor movies. And then it became something that everyday people could do in the 90s with the home computer. So you guys probably remember the E-Trade baby commercials. And the whole premise of that was it was so easy a baby could do it. And with E-Trade, they had lower commission fees, but they were still $20. And what we've seen since then, as commission fees have basically dropped to zero, public has no commission fees, which means that you can buy or sell, and there's no fee attached to that. So that makes it more accessible for more people to get in. There's also most brokerages, or many, don't have account minimums. Public doesn't have an account minimum. You could start an account with $5. The next wave of really democratizing investing is something called fractional shares, and this is pretty new. And you can think of it as stocks by the slice, or like an Uber pool for investing. So I haven't looked at the numbers yet today, but Amazon stock, last time I checked, I think one share is $2,500. So in the past, if you wanted to get in on Amazon, which is one of the top performing stocks, you would have to have $2,000 plus in your bank account ready to go. I mean, not a lot of people have that. So what it did was it just kept people out. It didn't even let people get in a little bit to learn and have an active learning experience. So with fractional shares, you can actually buy a piece of Amazon stock and own a percentage of a share for whatever price point you're comfortable with. And so that helps people kind of learn slowly over time with smaller amounts, and gives more people access to some of these tools that they just didn't have access to before. And Public offers fractional shares on our platform. And this is what it looks like in our user interface. Super simple. And again, you're investing with dollar amounts and not shares. Shares are kind of, they change, they fluctuate, they're not even numbers. That's kind of not how people think. I might say, okay, I have $10 extra this week, I want to invest in Apple, and it's that easy. And the last step here is kind of showing you how the social piece works. We'll ask you to share why you invested. You don't have to share your trades at all, but the why is really where people are learning, because you're explaining kind of what the thought process was. Why do you believe in this company? Why are you making this investment right now? And other people can see that, and you can have a conversation. And also worth noting is, similar to Venmo, it's not showing the dollar amounts. So me investing $10 in Apple looks the same as my friend investing $1,000 in Apple. And so it really levels the playing field of people can have the same conversation no matter where they are in their journey. The fourth myth is that you need, a finance degree to get this stuff, or that it's all about just reading charts and financial statements. This picture just made me laugh, because this is just what I think of when I think of the stereotypical kind of trader. You can invest and not have 4 monitors in front of you all day. I think there's a misnomer that you need to be really in those numbers day to day, and that's really all it's about. The financials are important part of it, a very important part, because it's telling you the health of a business. And it's great to learn how to kind of read and understand those terms. But that's only part of the decision-making process for most investors. So here's a look at our survey that we did. And as you can see, this is one of those polls where you pick as many as that apply to you, so it doesn't add up to 100. But what we see here is, of course, financials are the most important, because that's really like, okay, is this business healthy? Is it growing? Is it not? But if you take a look at what's right below that, what's the product like? What's the service this company offers? The next one, what are the trends in the industry? What's the consumer behavior? What's the competitive set? Values and mission are very important to people. 25% of people say they base decisions on the values of the business. And same thing with leadership. So all these things come together to form an opinion about conviction in a company. And what's interesting is that you could be someone who's very financially savvy reading the financial statements, but maybe you don't understand the consumer behavior in a certain industry. And that's why kind of in public, where we have a community of subject matter experts, you get that layer of, okay, this person's an expert in sustainable fashion, this person's an expert in data analytics. And when we blend all of our expertise together, we can kind of get that layer of nuanced conversation about products and trends. That's really helpful for making decisions. So here's just a quick example of an investment I made a few weeks back. I have seen e.l.f. Cosmetics for the past few years, and I just noticed kind of they were modernizing and changing a little bit. So I started to do a little research, and I read a lot about how they were investing in brick and mortar of their own properties in addition to retail partners. And then I was reading a lot about how they have a super advanced TikTok strategy that's working really well. I went on their website and saw they had built out a robust rewards and loyalty program similar to Sephora. So all these things, given my marketing background and understanding of their business, kind of helped me form a conviction that I believed in this company. Again, I'm not telling you to buy this stock. This is just my opinion, but I feel like they have a lot of room to grow as a company, because I feel like they offer, products at a very accessible price point, but they're also making a lot of good moves on the marketing front. And so when I shared this, then a conversation flowed with other members when we were exchanging ideas about the industry overall. And so that's really the concept with Public. Usually there's me in the middle and 3 sample companies I invest in. On most other platforms, it's just me alone with my portfolio. I have no one to bounce ideas off of. On Public, I can connect with people who work in, streaming media or healthcare, or, I have a friend who works in luxury fashion. I have another friend who does data analytics at an agency. And so everyone kind of sharing their perspectives in an environment with a broad community gives you that access to product and category information that is really valuable just to building a broader base of financial literacy. 5th myth is that it's rude to talk about money. I don't know about you guys. Growing up, my household, we were always taught to not talk about money. And I think that's kind of might be changing a little bit generationally. I'm sure you've seen a lot of examples of people sharing salary information at work to make sure that people are being compensated fairly, because they're understanding that collectively, the more data they have, the more power they have. And so I think this is somewhat of a myth depending on how you think about talking about money. So in our survey of people, we found that, almost 60% of people were already talking to their friends about investing. And this doesn't mean they were sharing how much they were investing, it just means they were talking about those basic concepts. And we actually saw in our app that when the market was really volatile in March, we had like twice as much time spent in the app, and social activity was up like 70%, because people were trying to make sense of what was happening and they didn't want to figure it out alone. They wanted to talk to people about it. So at that point, our product team really hustled and they built a messaging feature. And so this is essentially a DM chat function that's built for investment conversations. So you could actually, you could just type a ticker symbol and you could build a dynamic chart with different time frames. You can tag other investors. You could even, there's like a Zoom-like link if you see in that 3rd panel, and you could invite people outside the app to join the chat. So someone just started a chat about the upcoming Lemonade IPO, and now the chat has like 80 people in it and they're talking about it. And it's a great way to just house those conversations that might be happening in other platforms. The sixth myth is that financial news is boring. My background's not in finance, so I'm learning as I go, and I have some degree of background, but still I'm on, watching CNBC or Fox Business, and like, it's just the screen. Look at it. Like, there's so much going on, and yet it's just kind of like, who wants to sit there all day and watch that? And is it actually helpful? I think for some people it is, but this kind of view of financial news is changing a lot. And what's really interesting over the past few months is that business is actually the fastest growing news category, which is not all that surprising. There's no sports. Nobody really cares what the celebrities are doing. But it's growing faster than political news, which is kind of wild. And it's just, there's been this surge because of the uncertainty and everything going on. People are really following this stuff more closely, and it's forcing some of the legacy media platforms to adapt. But we're also seeing a lot of like newcomers and fresh voices come into the financial news space, which I think is amazing. So these are three of my favorite creators who I definitely think you guys should all follow if you're into this stuff. The first one is Carmen Perez. She's on Instagram at Make Real Sense, and I believe that's also her TikTok handle. She just has an awesome story. She dug herself out of a ton of student loan debt, and she does such an amazing job of breaking down complex personal finance concepts in a really digestible way. The second one you might know is Haley Sachs. She goes by Mrs. Dow Jones, and she makes really entertaining videos and content about investing. Again, just making these things more easy to access and more entertaining. And then lastly, I think Morning Brew is doing a great job. You guys might subscribe to their newsletter, but they also have a really, really good podcast called Business Casual, hosted by Kinsey Grant. And it's her sitting down with just titans of business talking about leadership, entrepreneurism, and it's just like a really great resource week to week. So I definitely recommend these three if you're looking to just build more literacy over time. In public, we're trying to do the same thing. And so again, if you turn on CNBC, you might hear them talking about sectors. That's great, but that's really not how people think about the world, like everyday people. So what we do to help people kind of discover companies they might want to invest in is we organize stocks in themes, and the themes are aligned with values or interests. So for example, today we just relaunched the Women in Charge theme, which is companies that have female CEOs. We have a theme around plant-based food companies who are in that movement. We have a theme around fighting disease, biotech companies. There's a cannabis theme for the legal cannabis industry. So this is just a way to explore what's out there, because I'm always surprised when I hear like a company's public and I had no idea it was a public company. So again, just putting it into terms people understand, I think sometimes is half the battle. And our tagline at Public is everyone's an investor, and that really means that everyone has it in them. If you're interested, it's now more accessible than ever. And what we're trying to do at Public is balance this access with the right guardrails on our end to make sure that it's a good experience. So we have those safety labels I showed you. We have a way to organize your portfolio based on long-term investments. You can actually lock things you want to hold on to for a long time into a special section. So it's really important to us that for novice investors, it's really accessible and familiar, but at the same time, it feels like a safe place where you can build your financial literacy with other people. So again, there's the code to get started. I would love if you guys would add me there. This is another cool thing you get when you join. Again, it's a free app. You have, everyone gets a public.com page / their username, and it's like almost like a public statement of the companies you really believe in. Again, it doesn't show your balances or anything publicly. It just shows your positions overall. And if you guys download the app and want to give me feedback, we love hearing feedback, especially when people just join. We just got a shipment of these really awesome hats in. I'm happy to send you some swag. So shoot me an email and I'll send you some swag. And with that, I think I'll check and see if we have any questions. If not, go ahead and type those in now. Stop sharing my screen. Okay. Let's see. Okay. How do we decide which stock? Okay, how to pick stocks, that's kind of a big question. I think a lot of people have different strategies. Some people are just looking at the numbers. I tend to be more of like I look at kind of, do I believe in the story of this company, and that, like, I look at consumer behavior. I look at where I think certain industries are going. For example, I was researching the other day companies that support e-commerce, because everything now is just surging in that direction. So it really depends on your style. There are lots of great resources out there for learning. There's also something called ETFs, which are exchange traded funds. They're baskets of stocks, so you can invest in an ETF that just mimics the S&P 500, or there's an ETF, a gender diversity ETF, if that's important, and that kind of helps you if you're not sure a specific company but you want to invest in a trend. There are ETFs there available too. Okay, the next question: how to find companies with values I believe in? Yeah, this one's a little tough because it's interesting. I always think about, like, a lot of people ask, is this company good? Is this company bad? And like, companies are very like people, they're very nuanced. There are some companies do amazing things in one area, and then you could peek behind another area and not like what you see. I think something that's interesting about just even investing in individual companies or learning about it is that you start to realize what's in some of the mutual funds that you might be investing in elsewhere. So for example, like a 401k account, you might just pick your target retirement year, but you might not know what's in there. You might have, gun manufacturers in there, or Philip Morris. So when you start to kind of look into individual companies, it makes you kind of go, and then makes you want to go back and look at your other investments too, to understand like what's in there overall. So it's really, it's tough. I mean, and it depends on your values. There's a lot of resources you can look up. For example, the other day I was looking at, I wanted to be aware of which companies utilized prison labor, because I didn't personally want to invest in the companies that did that. And so I found lots of content online about that. So if you can just dig a little, you can ask the right questions. I know we're running low on time, so let me see. Okay, difference between public and acorns. Acorns, I think, is a little bit different in that I've used Acorns. It's great. It's a built-in savings tool, so that when you're spending money, it's rounding things up and just saving things over time. And I think you can invest the money as part of that, but that's not really their core focus. Public's core focus is building a portfolio of different investments, so it's not linked to your spending behavior. So it's a little bit different. When will the app be available in Canada? Unfortunately, we're only in the US right now, so I don't have a time frame. Hopefully soon. Are there fees with public.com? So we're venture backed. So our investors are some of the original investors in Venmo. We're also backed by Will Smith, JJ Watt, who's plays for the NFL, Sophia Amoroso, a few others. So because we have venture capital money right now, we're focused on growing the community. Fee-wise, there's no commission fees. The app is free. If you go to our website, at the bottom, there's a link that says how we make money, and we just transparently spell out the ways we're currently making money now. So you could take a look there, but as a user, there's no commission fees. There are fees for certain more sophisticated things you might be doing, and those are listed on the website. What was my first ever investment? My first ever individual stock I bought, I think I bought Under Armour, and honestly, I don't know why. I think this was like years and years ago. I decided to dabble, and I think I opened a TD account, and I think at the time I was again looking at consumer behavior, and I thought they were doing a lot of smart things. I think if I looked at that investment now, it probably wouldn't have panned out the way I thought it would. How does public data? Is this something you check in at every day? This is a good question. So some brokerage accounts, again, with like day trading, it's higher volume investing. And so those businesses are kind of more focused on, it's better for them if you're trading a lot. For us, our main success metric is we want to make daily active investors, which doesn't mean you're actually trading. It just means you're engaged in your portfolio. So I'm a long-term investor. I'm really not making a lot of moves day to day, but I'm in public because it's curating news articles about the companies I invest in. I can read conversations. I'm in chat groups with my friends. So I'm engaged with my portfolio, even if I'm not moving things around. So I'm in it a lot. I work at the company, but it's really interesting. I feel like one thing about public that I like, and of course I'm biased, is that I can go in there and not touch my portfolio, but I feel like it's a positive use of my attention, which I don't feel like a lot of social platforms always do that. But I'm always learning about new things. I might hear about a trend or a company and I'll dig in deeper. But I feel like I'm kind of getting smarter, even if I'm just lurking for that day. Best strategy for starting. I really can't give you advice on a strategy for starting. I will say, because of fractional shares, you could start super small. So for example, you could take $10 and you could put $1 in 10 different companies and kind of see how it goes. I think for me personally, I found that starting small helped because you can read a lot of articles and the fundamentals are important to understand the terminology and everything. That's super important, but it's almost like learning a language where I can know what all the words mean and I can know the definitions, but if I'm not in that environment, sometimes you don't get the fluency. And so public is a way to kind of actively learn without putting too much skin in the game. And like I said, in the past, there was there was an account minimum and then there were fees. And so it was harder to get in and get that active learning experience. Whereas now you could, put a few bucks in and play around with it and learn as you go. And that's what worked for me. I'm not saying that's kind of advice for anyone else, but I found that to be helpful for me. Okay, difference between a full share and a partial share. Yeah, so a full share is, if you wanted to buy one full share of Apple stock, I think it's $350. So in the past, you would order one share and then it would charge you whatever the market value of that stock was at the time. With fractional, it's more self-directed in that you can say, I have $10 I want to invest. Give me whatever percentage of Apple equals $10. So you get a percentage of that share. So another word for it is micro investing. And so this person was asking, they use their $10 for Amazon, not a full share, obviously. So yeah, if you wanted to invest in Beyond Meat, you could put $5 in, you could put $10 in. We have thousands of stocks and they're all sliced. So when you go through the process, you just tap whatever amount you want to put in. And that's the amount. You don't have to go with the full share price. And then I think we have time for one more. Someone asked how we're just different than other trading apps, I guess. I think the big difference is the social aspect. So you have a layer of community that makes it so you're not alone. You can connect with other people, you can have conversations, you can chat with your friends. The chat groups are amazing. There's one in there called Women in Money, and we had a great virtual event and we carried the conversation on in a chat group. I'm in another chat group called Peloton Party People, of people who invest in Peloton, and whenever something news happens, we discuss it there. And then I have a lot of one-to-one chats too. So yeah, I think the social layer is the biggest thing. And also the long-term focus. Sometimes different brokerage or apps will cater to a specific profile of investor. And this is more for people who are long-term, not wanting to really day trade. We actually don't allow day trading on our platform. So it's more people who are long-term and who are looking for the social layer to kind of learn as they go. And then, okay, someone asked about the hats. Email me at katie@public.com. Give me feedback on the app. Let me know what you think. And I will send a form so you can get that cool invest hat for sure. With that, thank you to Freelancing Females. This is such an amazing event. Please email me, hit me up, add me on the app, keep the conversation going, and thank you so much.